Hey, have you taken a look at your cooking gas bill recently? Yeah, that red cylinder sitting in your kitchen? It just got a whole lot more expensive. And this isn't just some run-of-the-mill price tweak. Believe it or not, the reason for this hike connects your home directly to a tense military situation unfolding halfway across the globe. So let's dive in and unpack exactly how a global crisis is suddenly hitting your wallet. I mean, talk about a sudden shock, right? For millions of us across India, the week ended with a real jolt. The price of our cooking gas, LPG, it just shot up. And it feels like it happened pretty much out of nowhere. Okay, let's look at the hard numbers because they really tell the story. As of March 7th, that domestic cylinder we all use, it's up by 60 rupees. In Delhi, Mumbai, Kolkata, Chennai, everywhere. And if you're a business owner, wow, the commercial cylinders got hit even harder, a jump of 115 rupees. This isn't just a small bump, folks. This is a big, coordinated hike. So the big question is, why now? Well, you might think the answer lies somewhere here in India, but nope. To really get to the bottom of this price hike, we've got to look thousands of kilometers away. We're talking about a tiny, narrow stretch of water that has suddenly become the absolute epicenter of a massive global energy crisis. So, what's happening? It's a military conflict brewing in West Asia. Tensions are just skyrocketing between Iran, Israel, and the US, putting the whole region on a knife's edge. And you have to understand, this is way more than just a political standoff. It's a direct threat to one of the most critical energy lifelines on the entire planet. And this is it. This is the choke point we're talking about, the Strait of Hormuz. Seriously, think of it like a giant superhighway for oil and gas tankers. A staggering, and I mean staggering, 20% of the entire world's petroleum supply has to squeeze through this one tiny passage. So you can imagine any little disruption here, it doesn't just cause ripples, it sends massive shockwaves through the entire global energy market, instantly. Okay, so why does this matter so much to us here in India? Well, here's the number that brings it all home. A massive 85 to 90%, let that sink in, of our LPG imports have to pass through that exact strait. Our energy security, the gas in our kitchens, is completely tied to what happens in this one tiny waterway. And the financial markets? Well, they absolutely freaked out. It was immediate and it was severe. Brent crude oil, which is the benchmark for the whole world, spiked 20% in just 1 week. It shot up to almost $94 a barrel. This is basically the market panicking in real time, bracing for a total supply shutdown. Okay, so let's connect the dots. We've got a conflict over there, oil prices are soaring, and our main supply line is under threat. What does that mean for India? How are we being forced to respond to this chain reaction? Basically, the government is in full-on crisis mode. Here's what's happening. Shipping insurers are backing out, which means tanker traffic in the strait has pretty much ground to a halt. In response, the government has invoked emergency powers. They're telling refineries to pump out as much LPG as possible. And to do that, they're diverting propane and butane away from making other things, like profitable petrochemicals. So think about that. We're sacrificing industrial production just to keep our kitchens running. The one silver lining here? The 300 rupee subsidy for about 10 crore Ujwala households is still active, which helps cushion the blow for those who need it most. All right, let's zoom in a bit. We've seen the big picture, the national response. But how does this look on the ground for a single company? To really get it, we need to look at a case study. And we're going to talk about one of India's biggest players, Gail. And wow, the market's reaction has just been brutal. Take a look at Gail's stock chart. You can see it right there. Even before this crisis hit its peak, the share price was already heading for a yearly low. That's a huge red flag, a clear signal that investor confidence is just evaporating. And for Gail, it's not just one thing going wrong. They're getting hammered by a perfect storm, a real triple threat. First, there's the massive supply crisis we've been talking about. Second, they've got a leadership vacuum, right when they need a captain the most. And third, the company was already struggling with some pretty weak financial results. Now, the biggest hit comes from this legal term called force majeure. It sounds complicated, but for Gail, its meaning is devastatingly simple. One of their biggest long-term suppliers has basically said, hey, because of this unavoidable catastrophe, we can't give you the gas we promised. And just like that, Gail's supply from that major contract was cut to zero. Gone. And you've got to remember, the timing on this could not have been worse. In the quarter right before this crisis, Gail's net profit had already dropped by almost 58% compared to the year before. I mean, more than half their profit just vanished. So the company was already in a really vulnerable position before this whole supply shock hit.
So, Gail's story is pretty dramatic, but of course, they're not the only ones being affected. A crisis like this shakes up the entire energy sector, and it's creating a very clear divide. There are going to be some big winners and some big losers.
Let's do a quick breakdown of how this works. Think of it in 3 steps. First, you have the upstream companies like ONGC. These are the guys who actually get the oil out of the ground. For them, high prices are great. They're making more money. Then in the middle, you have the refineries, like Reliance. For them, it's kind of tricky. Their profit margins can swing wildly. And finally, you have the downstream companies, like IOCL and BPCL. These are the ones who sell the gas to us. They're the ones who really get squeezed because their costs go through the roof, but they often can't pass all of that extra cost on to you and me.
Okay, so with all this chaos swirling around, what should you actually be looking for? If you're an investor or just trying to make sense of it all, what are the key signals to watch right now?
All right, here are the 4 big takeaways. First, get ready for some serious volatility. Any piece of news coming out of West Asia is going to make these stocks jump all over the place. Second, the single most important thing to watch is the Strait of Hormuz. Everything depends on how long that route is disrupted. Third, keep a close eye on those profit margins we talked about, the refining and marketing margins. They'll tell you who's weathering the storm. And finally, diversification might be a smart play. Companies that have investments in both oil and renewables could have a bit of a safety net here. And you know, all of this, it really pushes us to a much bigger, more fundamental question. This whole crisis has laid bare just how vulnerable India is. Our energy supply depends on a single, tiny choke point thousands of miles away. So it really forces us to ask, if our global supply chains are this fragile, isn't it time for India to completely rethink its entire strategy for energy security?